Be Wealthy and Smart, episode 1573.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about stocks that are volatile over banking fears. The volatility index was up and the Dow Jones lost 300 points due to uneasiness in the banking sector, which has grown after recent bankruptcies of two auto industry-related companies, Tricolor and First Brands. Stocks that led the crisis were rebounding, and Wall Street defended the shares, and traders bet any bad credit bets were one-offs and not part of a bigger crisis. Zions and Western Alliance also disclosed bad loans over the last 48 hours, which sparked a big sell-off in the stocks that eventually dragged down the whole market on Thursday. Zions lost 13%, while Western Alliance tanked by 11%. But on Friday, Zions rebounded 4% after receiving an upgrade from Baird, which said the drop in the market value for the regional bank was out of proportion considering the size of the loan losses it was potentially facing. Investment bank Jefferies caught in the storm for its exposure to bankrupt auto parts retailer First Brands was last up 6% after Oppenheimer raised its rating to outperform. Jefferies had been down 11% on Thursday. Better than expected earnings on Friday from Fifth Third Bancorp also assuaged worries, sending the stock higher by 2%. The bank's profits jumped last quarter even after posting a jump in credit losses tied to exposure to bankrupt subprime auto lender Tricolor. Adam Crisafulli of Vital Knowledge said, "We don't think there are systemic credit problems for banks. Most of what we're seeing so far is a function of a few specific situations, while credit quality broadly, if anything, is tracking better than anticipated." Lizanne Saunders, chief investment strategist at Charles Schwab, said that the banking concerns come as there is a lot of speculative froth that has developed in the public market, with investors chasing stocks with riskier profiles like quantum computing, drones, and unprofitable tech stocks. She said when you have the speculative froth and then you have a sort of a bigger picture potential issue, those two can sometimes collide and cause an increase in volatility. Dan Niles of Niles Investment Management said he doesn't think the current concerns around regional banking will escalate into crises like what we saw in 2023 or 2008. He said, "Yes, we've had a lot of cockroaches," referencing JP Morgan's CEO's comments on auto company bankruptcies earlier this week. He said, "You have some issues with fraud, 100%, and there's probably more, definitely. But I don't think this is going to turn out to be something systemic like you saw in March of 2023, or obviously when Lehman Brothers failed." Yes, it seems like the bad news in banks is contained, and although it did spread a little bit overseas into European markets, where the European stocks bank index was 3% lower, it doesn't seem like we have a crisis situation starting. Looking at the jobs market, we have some new data. The layoffs at U.S. companies probably eased last week, according to data compiled by Goldman Sachs. They estimate the initial weekly jobless claims fell to about 217,000 for the week ending October 11, which is down from the previous week's 234,000 and below the Dow Jones estimate for 230,000. Recently, a survey said more than a quarter of Americans are concerned that they could lose their job in the next year, which is the highest level since CNBC first asked the question in 2022. But in a sign of confidence, 58% said they feel secure enough that they can find a new job with similar pay and benefits if they lose their current position. So we've got some volatility in stocks and especially in crypto, but this can happen right before big rises. When you have a sharp move down like that, it's not uncommon for the market to turn and take a sharp move up. And in my opinion, chances are that's what we're about to see. So we'll stay tuned and report back to you as the story unfolds. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.